So good morning, everyone. Let's start with our market review. Yeah. So Dow Jones has been sideways. It continues to be sideways since the last 3 weeks. It has broken out the trend line couple of weeks back, but doesn't seem to hold up at higher levels. A lot of noise around there, inflation and the Fed outlook and guidance that keep coming. They themselves are not again very sure because day before yesterday they said that they need to have further rate hikes, but yesterday again they announced that it may not be needed much and they are again sailing to it. Looks like US is totally confused about the outlook of their inflation and their economy. So nothing much is happening at the Dow Jones end. Nasdaq broke out. Nasdaq overall is strong, but if you see, it has not been able to cross the highs of 22. It is hovering around the same levels, and that's okay. It'll take some time, but once it breaks out, the growth stocks will move quite fast. Nikkei, that the Japanese market is overall strong. The RSIs are strong. There's nothing to worry. It has been retracing. Once their daily RSI comes close to 60 and reverses, again, it should be back in momentum. If something has to go wrong, then that will fail. Germany went into all-time high almost, and it failed, and it has been sideways on all time frames now. The entire momentum it had built up over the last few months has now failed. So it is back in sideways. So this is the weekly chart of Germany, which clearly shows that it attempted to break out the highs of 21 and 22. It just went up for a week, but it didn't hold back there. It has come down, and now it is in consolidation mode. So this was the strongest market in Europe, but that is not holding clearly. USD INR for the last 2 months, we've been tracking. The range is getting very narrow. Last session when we had, it was somewhere here. There was a good rally of 2 days in USD INR, and it has not been able to cross the resistance line. Upside, you see the multiple resistance. It's ready to break out on either side as the range is getting even narrower. So let's see how it plays out in the next few days. Indian markets overall has this week been pretty good, though Nifty and Bank Nifty have been quite flat. But PSU, auto, energy, FMCG, reality, small cap, these indices have done fairly well. A lot of stocks have seen really all-time highs of 52 weeks high in this week. So after Nifty crossed 18,900, which was the previous resistance, the rally has been really one-sided. So clearly Nifty is trending with all time frames being strong. It's clearly just a retracement that we are seeing in the index after a strong up move of almost around 650 points after the breakout. So there's no fear as such in Nifty. Having said that, this is 8, 20, 50 and 200-day averages of Nifty. So any stock or index generally goes along with the short-term averages. If it deviates too much from those averages, it tends to correct a little. Either it corrects with a big price correction, tests the averages and moves back up after a little bit of consolidation, or the market itself goes into a consolidation where the averages come at par with the price. Now, clearly, this upper line is the 8-day average, and this is the 20-day average. It has deviated quite a bit because of the spike in the gap up rally that we have seen over the last few days. Whenever you've seen such movements in the past, it retraces at least till the 8-day average, shoots up. After a point, it retraces to the 20-day average, consolidates and moves up. And this is a very normal process for the market to follow. Clearly, this has happened in May. It has happened twice in May rather. It has happened in June also. Right now, we are quite deviated from the short-term averages. And so correction till there is needed, which will only make things better for the market to move up. So one-way rally, obviously, after a point, some exhaustion has to come. If it doesn't fall, correct to the mean and move up, you're going to face difficult times going forward. So better it happens now. Bank Nifty is trending. All time frames are strong. There is no problem. The daily has stopped, corrected at 60-day average. If anyone also has noticed, the 1 hour chart RSI did not break 40 yesterday. It kept hovering around that. That is why we saw that 100-150 point pullback around 233 in Bank Nifty, because all other RSIs were strong. So that spike up was there because it wasn't able to break 40 on the hourly. It was a good intraday trade to do, but with a lot of risk, obviously, because we saw after a 150 point spike how it came down immediately. Within 5 minutes, it gave up all the gains. The only concern in Bank Nifty remains the weekly candle. The weekly candle is not very good, or even the monthly for that matter. But since it is in momentum, we cannot really see a big drastic drop in the banking sector yet. Nifty, this was the 2021 high, 22 high, which we have seen, and the breakout from here. Now this becomes the support going forward. So 18,887 is our support, and that now should not be broken. And the recent high of 19,523. Now this range is here to stay. This range should hold, and market should consolidate in this range and then break out. So as long as it is in this range or breaks about 19,523, we are all good. Retracements up till 19,000 is likely because of the averages, and even the 20-day average, which is coming to 19,000 odd. So there's a possibility of that being tested, but it remains in this range now. And only a close below 18,887 or 18,800, I'll give a buffer of about 80 points, which is just about 0.5%. If it closes below that is when the market will go back into a negative trend, and very unlikely to happen, but yeah, that's the level which we need to watch out for on the downside. If 18,887 is broken, we have to exit clearly. But yeah, if it happens. So now in the past 3 months, Nifty has moved from 16,800 to 19,500, which is a 16% upside without any profit booking. Barring 2-3 days of sideways movement around 17,700 and 18,800, we have not seen any major profit booking in the market. So it's clearly deviated from the means and needs to retrace a little before the further rally, what I just mentioned. So 1887, 19,523 is the range that we need to watch out for. Now, while if the Nifty is even consolidating, sector-wise and stock-wise momentum will continue. So there is where we have to watch out for and build our positions based on the confirmations. Now, Nifty larger picture, this is something that I had shared in May and June. So this was a range of 16,800 to 18,887. We have broken out from there. The next target from Nifty comes to 20,947. So which is almost about 1,500 points more above the recent high. So we have a long way to go in Nifty from here. So overall, there's nothing much to worry. As long as this trend continues, we have a lot of money to make, and we just have to go very smooth, stick on to the stronger stocks. So let's not worry about the downsides for now. Upsides are quite optimistic. The concern we had 2 weeks back when it wasn't able to cross 18,900, that fear is now negated. Mid-cap index is something very, nice, because most of the momentum, what we see, or most of the money is made in mid-cap stocks. Mid-cap index has moved 26% almost from the March end lows, almost I would say April beginning. Our 26% upside is quite a substantial rally as an index, because when an index moves up 26%, stocks move up anywhere between 20% to almost 100-200%. So some profit booking is very normal, and it will be good. I won't say everything will fall, but there may be consolidation in mid-cap stocks before a further rally. And again, this also has to correct to its mean. So let's watch out in the mid-cap space also very closely what happens. So sectors to watch out: banking, auto, FMCG, PSC, and reality are still strong. Yesterday, DLF did come down because yesterday was a news that was floating around of 54% vacant space lying in the commercial spaces in Delhi, Gurgaon. That news came actually officially at 325. So that was one of the reasons why DLF was a little stressed yesterday. But barring this, I think every other sector and the stocks in these sectors were holding on pretty well this entire week. So we are still optimistic on these sectors. A couple of stocks which are on my watch list. This is Electronic Marts India Limited, or Bajaj Electronics, which is a Hyderabad-based retail chain. They had an IPO last year. After the IPO, it has fallen. Now it is forming a cup pattern. If it breaks out about 92, 93, we'll accumulate it looking at 123. So this is on the radar, should break out next week, hopefully, because the volumes also are pretty good in this. TVS Motors is another stock which, based on my RSI criteria, is playing out pretty well. The RSI on daily is hovering around 50, 55. So we can look at this. If this is positive on Monday, we look at adding this back. So this is all for the market review for this week.